dollar Canadian dollar daily forecast, May 17th, fxempire.com. The dollar CAD pair has been one that we've been watching for several sessions, and the biggest problem that we've had going into it was the fact that the resistance that we were running into wasn't just the parity level, it was in fact a block that went all the way to 101. As you can see by the daily chart, as we are recording this towards a close, we have smashed through that now. So, this does flip the bias in this pair as far as we're concerned. This is a buy pair as opposed to a selling one at this point. The oil markets have definitely worked against the Canadian dollar, and it seems just now that the currency markets are catching up with oil. Quite frankly, this happens quite a bit. If you keep an eye on both markets, one will almost always lead the other. The breaking down below the 95 level was the first shot across the bow of the Canadian dollar longs. Now that we've broken the 101 level, a simple break of the highs from the Wednesday session would be enough to have us going long. It does look like 103 would be the next target and should be reasonably significant resistance. Pullbacks, as long as we're above the parity level, could also be used to buy as well, as there should be support now when we fall back into this zone. If we do get a close sub parity, we would consider that a route back into the consolidation previously. Fairly simple setup, but there are several different parts to it. Again, a break of the highs, we go long and aim for about 103, where we would have to reconsider whether or not the market's going to have any momentum. A pullback into this area and some type of supportive candle gives us an even better entry to go long. And then again, a break below the parity level has us thinking we are going back into the previous consolidation, which would let us sell, but for a short-term trade.